Wells Fargo shares closing down 2% today after agreeing to a settlement with the Consumer Financial Protection Bureau. The bank ordered to pay the largest ever civil penalty issued by that agency over allegations of misconduct tied to customer mortgages, auto loans, and overdraft fees. CNBC.com banking reporter Hugh Song is with us to talk more about this. Hugh, package this together with some of the other regulatory issues that Wells Fargo has worked through. Is it an extension of those sort of, cross-selling allegations and settlements, or is it totally new?
I would say it's an extension of the culture that led to those cross-selling, essentially the fake account scandal from 2016. The thing that really raised my eyebrows today was, we learned that the issues that they had with auto loans, the issues they had with mortgages, the issues that they had with bank accounts, some of those continued till this year. So in other words, even though the 2016 fake account scandal brought all this attention onto the bank, that they had issues with the basic nuts and bolts of retail banking for the American consumer all the way up till a few months ago. And so that's really the surprise here, Mike, is that, even with all the attention on them, all the regulators in the United States focusing on them, that they had some issues here that were, really rather basic banking issues.
And in addition to the size of the fine, which you've heard some analysts today say, well, they had a reserve for it, so maybe it's not necessarily immediately harmful to the books, does this action come with any constraint on their business activities or any further supervision? I'm wondering, how much life these issues are going to have within Wells Fargo.
Well, for today's look, it was sort of a little bit of the battle of the press releases. Now, if you read Wells Fargo press release, they were happy to put this behind them. If you listen to the CFPB head, he was very clear. He said, look, they're not done. They're not out of the penalty box yet. This could be, for instance, the employees. None of them get immunity, and that if there are ongoing problems, if they're found to have ongoing problems, that they can go ahead and come back and re-examine them and continue to penalize them. So I would say, look, it is very clear to me that, the regulators, they want to, at the very least, seem very tough on Wells Fargo. Wells Fargo is still the punching bag of the banking world. And so I think that's going to have knock-on effects in the future. By the way, they pre-announced the $3.5 billion operating loss for the 4Q. And what that tells you is that they're actually they're reserving for future settlements that they're going to have with some of the remaining, I would estimate, 6 to 8 consent orders that they can currently face.
It's kind of a cynical way to approach this question, but to what degree do you think these practices are not unique to Wells Fargo? In other words, simply the fact that CFPB and other regulators have been looking closely at Wells Fargo, at the culture there, they're kind of come at it with a level of suspicion that they're discovering these issues that maybe are not unique to Wells Fargo, and who knows what it would mean if you were looking into other banks.
Well, Mike, I'll lead with this number, 16 million. That's how many customers they had, made mistakes with in terms of mortgages, auto loans and bank accounts. So, I sit here and I get emails, and I'm sure the CFPB gets complaints from other banks, American banks, Canadian banks, that do the exact same thing. So, on the one hand, it is, symptomatic of some very, widespread issues. On the other hand, I don't know if there's another bank that's had these issues at this scale, which is indicative of cultural, systematic, regulatory issues and problems that they've had since Charlie Scharf took over a few years ago.
Yeah, and certainly, the fact that you say these issues were present until not very long ago is definitely something to take up and notice. Hugh, thanks very much. Good to talk to you.
Thanks, Mike.